a big watershed moment for the industry was when Stripe bought Bridge, and we've seen PayPal enter the stablecoin market. We've seen Ripple now get approved for a stablecoin. Visa's talking about a lot. I think the rate at which crypto products get adopted by these neobanks or traditional finance institutions is really going to push things forward. And the secondary effect of that is going to be much more use of things like DeFi products.
We all want to believe in something. In Chinese, belief also means trust. We want to trust our systems and each other so we can build a future beyond what we know. Join us at Consensus Hong Kong, where belief becomes real.
Hello and welcome to Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. On today's show, I'm joined by CEO and co-founder of Maple, Sid Powell. Sid, welcome.
Hey, Jen, thanks for having me.
Of course, thanks for being here. Now, markets are back in the green this morning, but still a far cry from where we were early December. Talk to me about what you're watching, and maybe even help me make sense of some of the movement we've seen lately.
Yeah, for sure. I mean, yesterday we saw BTC dip below 90. Overnight, it's since rebounded to 96. This suggests some strength and a bit of shakeout of weakness. There were certainly some liquidations and margin calls that were seen across the market. We're a lending business, so we've seen some of the margin calls occurring. But I think folks are keeping an eye on the institutional buying that's supporting Bitcoin at the moment. I do think we saw elevated numbers there, suggesting over 5,000 Bitcoin were bought by corporate buyers in the first couple of weeks of this year.
Talk to me a little bit more about institutional buyers. How do you expect them to act over the course of the year? I know we are heading closer and closer towards Inauguration Day. We are hopefully going to get a more crypto-friendly administration here in the United States. How do you see institutional buyers reacting to that?
I think positively overall. I mean, like everyone, we're keeping an eye on the inauguration. We're less than a week out now, and all signs point to a more positive regulatory environment. We also have just seen that institutional buyers now have more access to Bitcoin products through the ETFs that were approved last year. And there's every suggestion that we'll see more ETFs coming to market over the course of this year. So I think you can expect to see increased institutional participation, both across more large cap assets, as well as just more inflows into the BTC ETFs. Historically, we've always seen that years 2 and 3 see elevated inflows into ETFs. Just looking at the gold ETF, for example.
Now, you mentioned that we might see more ETFs this year. We, of course, have the Bitcoin and Ether ETF in the United States. Do you have your sights set on any other ETFs being launched in 2025, like maybe a Sol ETF or something else?
I think I would expect to see a Sol ETF or an XRP ETF. Interestingly, on the lending side of our business, we've actually seen more increased demand to borrow against XRP, which suggests that institutions are holding it on their balance sheets. And a dark horse on the ETF side would be more DeFi tokens. I think DeFi is expected to benefit from the change in regulatory regime. And we have seen Grayscale put out a proposal to include more DeFi tokens in an ETF product. So I think that would be the dark horse, but otherwise my money would be on Sol or XRP.
You sit in an interesting seat, I think, to answer this question when it comes to institutional interest in DeFi. Before the
Mhm.
Bitcoin ETF was approved, there was like a lot of chatter, do institutions really understand Bitcoin? They're now
Yeah.
starting to get their toes wet a little bit. And so now
Mhm.
going to a DeFi ETF, like you said, sounds like a dark horse, sounds like a little bit of a far stretch. Talk to me about how institutions are looking at DeFi, and has their education just escalated exponentially since the approval of the Bitcoin ETF?
I think so. I mean, in short, they certainly understand DeFi a lot better than they did this time last year. We've seen that most of the large DeFi projects are behind the scenes in conversations with some of these traditional finance players or asset managers. I think Athena published a roadmap the other week in which they alluded to a fund wrapper for their product based on conversations with some of the large asset managers. we as a DeFi protocol ourselves have been in conversations with a number of the large bulge bracket US banks, as well as the asset managers who have either dipped their toes into ETF products or custody options for their clients. So institutional knowledge of DeFi has come up a long way. And I think people also expect that regulatory treatment will be a lot more favorable this year. Even just last week, we saw um, a judge rule that the SEC needed to provide an explanation as to why they did not provide rules around what tokens would be considered securities or what crypto products would be considered securities. So I think that would be a tremendous boost forward for the industry.
Talk to me a little bit about some of those use cases. Why are institutions interested in DeFi? Is it coming purely from demand from some of their customers?
I think it comes from demand from their customers for increased utility in their financial products. Um, our angle of conversation is typically that clients of some of these large asset managers who hold Bitcoin might want to borrow against it, but that asset manager can't provide that service. So they then loop into the conversation folks like us who could offer their clients loans against that Bitcoin, provided they keep it in custody with them. So I think that's one angle is there's just certain products they can't yet provide to their clients. And so they look to DeFi for this. And I think the other thing is just attractive valuations. If you look, Circle's projected to IPO at somewhere around five, or high single digit billions. You look at Ondo, which has a comparable product, and this is valued at north of $11 billion fully diluted. So I think some of these institutions, from background conversations I've had, are very interested in the valuations applied to these DeFi products and view that as a big opportunity for themselves.
We started talking a little bit about regulatory outlook there. I want to talk to you about how you expect DeFi to come into the regulatory conversation
Mhm.
here in the United States. We do have a little bit of a further way to go than some jurisdictions like Europe, whose MiCA
This is
regulation
true.
came into effect in December. But what kind of role do you see DeFi playing as we get more clear regulatory frameworks in the United States?
Well, we can come to Mika a little bit later, but I think it's important not to assign too much value to getting to market first with regulation. I think guidance is great. Even guidance would be a step forward from what we have today in the US. But the problem with imposing too strict regulation up front is you can just crimp the innovation or the entrepreneurs in your market, which I think we have seen costs increase in Europe as a result of MiCA. But what I would say is that the three big catalysts for DeFi in terms of regulation would be one, the ability to issue tokens. So, or even just guidance on what makes a token a security or not. Two would be the ability to turn on fee switches for tokens. I think that would be a huge unlock. We've seen governance proposals over the last 12 months for Uniswap, for Athena. This is something that everyone pays attention to. And the third and final one would just be offering DeFi products to retail in the US, even if in some limited form. There's many DeFi products that are only available to accredited investors in the US, and this just shrinks your market significantly. So I think if you could offer them to retail users within the US, you just have a much larger market for DeFi to access. So those are the three things I keep a lookout for.
Do you think we're going to get those three things in 2025?
I think if we could get even one of those three things, it would be great for the market. So I'm not holding my breath for all three.
Yeah, I mean, our incoming president has done some playing in the DeFi
He's
world.
dabbled.
He
He's
has
certainly
dabbled.
dabbled.
Yeah, so we'll see how that progresses. But I want to zoom out a little bit now here and look at things from a macro level. Some pretty robust jobs data came in recently in the United States, and now Goldman Sachs is pushing out the next interest rate cut from March to June, saying that they expect now that we're going to have two cuts next year instead of three. Talk to me about making sense of this data. How do you think it's going to impact risk assets as we move further into the year?
I think it's a bit of a double-edged sword. So the jobs report that was posted showed a couple of important points. 250K jobs added in December versus an expectation of 160, so stronger than expected, and then 4% wage growth year on year. So I think those two point to signs of potential inflation. So folks may get concerned about that. It can potentially be positive for Bitcoin and other financial assets because inflation tends to push those up. However, the tempering factor is that, as you pointed out, folks will now expect that a rates cut is going to be pushed further into the future or be reduced in size. And this is generally going to be bad for risk on or growth assets, which crypto definitely falls into that bucket for most investors. So I think that will temper people's enthusiasm around how much price appreciation we could see over the next couple of months. But it's also important to note that the positive jobs number does point to resilience in the US economy. So I think that is an underlying positive for people to take away from the report.
You made a prediction, albeit you made this prediction before this jobs data came out, that Bitcoin could see 100% increase over the course of 2025. Do you still
Mhm.
think that given this data?
I do still think that. I think that whilst we might see a tempered monetary policy from the Fed, that we are still in the early innings of a bull cycle, and I the tailwind for Bitcoin is, of course, the inflows into the BTC ETF, which will drive buying pressure for it. We've also seen corporate balance sheets start to put more Bitcoin on there, and even some proposals for large companies like Amazon or Microsoft to add Bitcoin to their balance sheet. So all that suggests that there is going to be an increase in demand for Bitcoin over the course of this year. So I do still think that long-term prospects are good, and I could see that 100% increase over the course of this year.
So are you saying more corporate interest, more institutional interest is what would drive the price higher?
Yes, that's right.
I always like to get into the brains of the guests who come on this show, and I would love to hear, what's top of your mind? What keeps you up at night when you're looking at the markets?
I think people are not factoring in how fast traditional finance and neobanks are starting to adopt crypto products. I think a big watershed moment for the industry was when Stripe bought Bridge, and we've seen PayPal into the stablecoin market. We've seen Ripple now get approved for a stablecoin. Visa's talking about a lot. I think the rate at which crypto products get adopted by these neobanks or traditional finance institutions is really going to push things forward. And the secondary effect of that is going to be much more use of things like DeFi products. So I just don't think that's appreciated enough by folks who are watching the market, because everybody, of course, focuses on the major headline, which is Bitcoin price. But I think those underlying trends of adoption are kind of underappreciated by people.
I want to talk about a specific stablecoin and come back to MiCA regulations, which we were talking about earlier on in the show. The regulations came into effect in December.
Okay.
One of the bigger stories that came out of that was USDT not being compliant. Talk to me about what this means for platforms like yours, what it means for stablecoin adoption, and what it means for USDT.
Yeah, so what happened was that USDT was not compliant with MiCA at the point of cutover at the end of December, and so the exchanges have stopped. The exchanges in Europe have stopped offering trading pairs in USDT to Bitcoin and other large cap assets. Instead, that's shifting to USDC. So good win for USDC for Circle and Coinbase on that front. But what does it mean for people? I think Tether still has a really significant network effect. Which is mostly in Asia. So if you look at most of Tether's trading volume, it occurs in Asia. About 80% of it is in Asia. So I don't think this has really dented that network effect. The hit to Tether's market cap was really only about 3 bill of 100, close to 140 billion. What does it mean for businesses like us? We do lending in USDC and in USDT to institutional borrowers, but the vast majority of our lending is in USDC, because that client base tends to be either US or more developed markets rather than emerging markets. Um, so I just don't see it being as significant as what people initially made out. Um, and I don't see it really denting Tether's network effect. I do think it is a big win for Coinbase and Circle. I think Coinbase has continued to rack up wins for this year, so they're going to be happy with the result, and they're going to try and push for more of that market share and try and use that as a springboard to get more USDC trading pairs on some of the Asian exchanges.
All right, we've talked about stable coins. We've talked a little bit about DeFi lending. We've talked about regulation in the US and Europe. If you were to look into your crystal ball as we head deeper into
Mhm.
2025, and there was one thing to watch, and let's stick to DeFi since that's where your expertise lies. what should we be watching when it comes to DeFi as we head deeper into the year?
So I think watch for. So I think stablecoins are going to help DeFi because DeFi is ultimately powered by stablecoins. So I think keep an eye out for a stablecoin circulating supply, and then look out for some of that, some of those regulatory tailwinds. So guidance on what DeFi products can do, and whether they could turn on the fee switch. I think that is a big prediction. That when I talk to a lot of VCs, they all talk about the possibility of DeFi protocols being able to turn on fee switches as they hit profitability. So that's one thing I look at. We actually just put out a proposal ourselves, and I can see that Uniswap and Athena have done so recently as well. So I look at that as a big resurgence for DeFi. I think it's going to be the best performing sector within crypto over the course of this year.
So thanks so much for joining Markets Daily today.
Thanks for having me, Jen.
And thank you to our audience who watches Markets Daily every day. If you prefer listening to the show, subscribe to the CoinDesk Podcast Network that is available on all podcast platforms. If you prefer watching, we are on YouTube. Subscribe, give us a thumbs up. As always, it's been a pleasure, and we will see you tomorrow.